Hello guys, welcome to Unison's weekly fundamental analysis. So first of all, as usual, we'll look into the dollar. So on 12th of February, the US dollar index rose slightly and deviated from the intraday high. As risk appetite reappeared in the afternoon, investors also made profits on other currencies against the US dollar before the long weekend in the US. So the US dollar index rose 0.04% to 90.445, an increase of 0.4% at one time. The index fell 0.61% in a week, the biggest weekly decline since the week of December 18. So ING analysts say that this is a kind of consolidation sentiment amid the uncertain pace of US economic recovery. Zachary interest mentioned that the rate strategy at Wells Fargo say that the dollar's rally has lost momentum, but we are not ready to give up the short-term bullish views, which is their opinion on the dollar. So upcoming is the US also announced on Thursday that the number of weekly claims for initial jobless benefits was weaker than expected, adding to people's concerns that the US economic recovery has been too fast as the dollar previous rise has digested. Marshall Gittler, head of investment research at BD Swiss Group, said the outlook for the dollar for right now is still weak. Next, we'll look into the euro. So, in an online interview with The Economist, the European Central Bank President Lagarde said that the eurozone countries must maintain fiscal spending growth this year and 2022 to avoid permanent damage to the eurozone economy from the COVID-19 pandemic. Lagarde also said in the European Parliament on Monday that the European Central Bank will continue to implement large-scale stimulus measures to revive the economy hit by the recession, but governments need to continue to spend. The fiscal policy, whether at the national level, it's still at the European level and is still essential to drive the recovery. Besides, Lagarde also called on the euro leaders to launch a 50 billion euro the next generation EU spending plan, because some economic restrictions may last until the second half of this year. She believes that if the plan is implemented in accordance with the timetable originally and envisaged, it may have promoted economic growth this year. So we'll look into the pound next. The UK has taken action to tighten travel restrictions starting next week and will require passengers arriving in the UK from countries with the spread of the COVID-19 variant to pay for a 10-day quarantine hotel. Those who fail to comply will face fines or detention. And the pound is still largely supported by the Bank of England. The Bank of England lowered market expectations for negative interest rates last week. The money market does not expect the Bank of England to adopt negative interest rates at least until 2022 August. And next, the Bank of England chief economist Haldane wrote in an online column in the Daily Mail that 1 year from now, the UK's annual economic growth rate may reach double digits. He predicted that British families may accumulate as much as £250 billion of nest egg. And once the country leaves the COVID-19 prevention restrictions, spending will surge. And furthermore, ING foreign exchange market strategist Francesco Pesel and Peracrapta wrote to clients, negative interest rates are unlikely to be implemented in the next 6 months. The pound against the dollar is expected to reach 1.5 by the end of the year. So next we'll look into the forex calendar for next week. So as usual, friends, traders, please put your stop loss, as whenever you trade, whenever there's a news, the market will fluctuate. So remember, put your stop loss and enjoy your trading. So that's all for today. Thanks for watching.